What's up, traders? Matt from the Trade Brigade here with your weekend crypto report, where as always, I do a technical analysis and give you my thoughts on the coins listed up above. A couple of changes to our watch list. We went ahead and removed Dogecoin, no setups worth watching there, and we've added Matic, okay? Matic is kind of the hot name on the street right now, so we'll take a look at the chart and just, mention if there's something worth watching. For now, we're going to kick things off on the Bitcoin daily chart, and I want to start off by reiterating the same concept we discussed in last week's video about building blocks, right? If we're going to be making forward and upward progress in Bitcoin, this is the must-hold level for the most ideal forward and upward progress. So that's around $53,000 per coin. If you want to give it a little wiggle room down to the support trend line, it's $52,000 per coin, but you get the gist, right? This general zone in the chart is very, very important. If we bounce here, what's the target? Well, I would say you would start looking for the back test of about 60,000, but we do have something important standing in the way. We'll talk about that on the 4-hour in just a second. And if we break down further from the support trend line here, it's all about the midpoint of section number 2 down here, closer to $47,000 per coin. I would also maintain that this is still a decent spot to be getting involved, right? If you think about the swing trade perspective, looking at 60K as a target, that would mean that your risk reward would kind of be along the lines of about 3-to-1, right? If you do something like this and put a stop just underneath the low here, underneath the support trend line, I don't know about you, but roughly speaking, my eyeballs would say that's, about a 2.5, maybe 3-to-1 risk reward ratio. So that checks out. From an investment standpoint, right, if you're thinking about those building blocks, why would it not be logical to buy the low end of the current block that's trying to print, right? If it does move higher, fantastic. If it moves a bit lower, you still have some areas where you can dollar cost average into the coin. That's, again, the investment perspective here inside of Bitcoin. Let's drill down now to the 4-hour time frame chart and just talk more nuance and really discuss why there's this important level standing in the way of 60K. And if you remember the concept of overhead supply, we talked about it a couple of weeks ago. Really, it's why this 50K mark was so important. The same thing, but on a smaller scale, is going to pan out right here. If all of these people are thought of as overhead supply, on this continued bounce, and again, note that we are getting a 4-hour hammer here, this is the first place where people with the best possible location there could start getting out for break even. And depending on when this happens, depending on if it's immediately right now or over the course of a couple of days here, the resistance trend line will be right there to meet us, forming a bit of a super resistance. So that's why $56,000 per coin is going to be the roadblock to unlocking 60K. So if you do decide to swing trade it, reevaluate the chart when we get to 56K per coin. We know after that it's 60, and then you can walk up the target 64, so on and so forth. As of right now, this hammer would definitely indicate that buyers are stepping up around this zone. I'm not claiming to be some sort of genius by recognizing the support trend line or the horizontal area. It was a very obvious structural thing from the daily, but the buyers are responding, right? We are getting some confirmation with this 4-hour hammer that is starting to form. You would want a little bit more, so taking out the high of that candle to get us to here, and then again, you can walk those upside targets from there. To the downside, we talked about 47, and we'll sort of leave it off as that for right now. Doesn't look like we're going to break down, but things could change in the blink of an eye in the crypto space. So 47, just keep it on your radar if a further breakdown does come. Let's move along and get into Ethereum, still on the 4-hour time frame chart. What I would point out about this one is that this is starting to become kind of the range. You can break it down into sub-ranges, right? Something that would look like this and then look like this. That's what this line is doing at about 4,400. And what I would say right now is that it's definitely still in the midpoint of this range number 2. And whenever something's in the midpoint of a range, it's very, very difficult to say what direction it's going to go in. From a more nuanced perspective, what you might say is that this is a set of lows. This is technically starting to be a higher low. Very nuanced, still kind of in the midpoint of the range. I would say that maybe the chances are starting to favor a move into that 4,400. But as we know, midpoint, again, 50-50 shot for higher or lower. I would just watch out for this as your first major area to pay attention to. And if we can start accepting inside of the next one, then fine. That's obviously going to bode well here for Ethereum. But from the larger range, right, in terms of talking about these things, that's your midpoint. And again, if we get here, you still have the 50-50 shot for higher or lower. It's not abundantly clear what Ethereum wants to do right now. I would say this chart is looking a little bit more sloppy than something like Bitcoin, which is clearly sitting right on a critical area of support. This one is a little bit more difficult to read, harder to get involved in. The setup isn't as clear. Again, the main takeaway would probably just be that we do technically have a 4-hour higher low, which is starting to form. We talked about upside targets. If it wants to return back to the bottom end of the range, the number to watch is 39.50, and any breakdowns from there take us to about 36.58. Probably not a likely scenario, but again, just like we said in Bitcoin, anything can happen in the blink of an eye in the crypto space. Let's move along here to Binance Coin, and zooming out on this one, I want to just remind you that it's basically just below all-time highs, and it's respecting this symmetrical triangle, right? We pointed this out in last week's video. And what you'll notice anchors way back here, a couple of touches along the way, perfect pullback into it, kind of like Bitcoin, but not as close to the bottom end of the range here. So clearly higher lows still forming. We are getting that 4-hour hammer candle structure printing, so buyers are stepping up here. I would say if you are looking for a trade in Binance Coin, it's probably the break of 606 to get us back to the top end of the symmetrical triangle, the resistance trend line, and just basically this horizontal level at 650. From there, monitor for the break into the most recent swing highs, and then the all-time high is sitting up there at, if we scrunch up this chart a bit, 691. Okay, so the chart is looking fairly good, noting the sort of relative strength, the fact that it's hanging out high and tight, as opposed to like Ethereum, which we just saw, which is a little bit lower. Bitcoin's obviously at the low end of the range. This one is looking slightly better than both of those charts we just saw in Bitcoin and Ethereum. Let's move along to Cardano, so ADA, and this one is looking weak. Okay, so the exact opposite of what we just saw there in Binance Coin, clearly in a much firmer downtrend, coming back down into this section here. But remember, right, if you do something like this, you could technically use that as the sort of foundational block. We're kind of starting to bounce off of it. Okay, so just, remember that from a sort of context perspective. And then zooming into where we're at, the hammer isn't as clear, right? This is starting to become a bit more of a doji instead of a hammer. So that's not the best thing, a little bit more indecisive. If you think about this as a range, we're kind of in the midpoint of this range. It's not, again, sort of more like Ethereum. Direction isn't really clear here. If it does move higher, looking about 162, anything above that, maybe that's probably the trade I would start looking for. Here's a low, higher low, kind of equal. If we can do something like this, pull back, then higher low break, that would be probably the setup to pay attention to. So a break of 162 into 175, give or take. From there, you can monitor for continuation into about 190. But do remember, again, this is relatively weak. It wouldn't be my first choice for fishing for long setups. Probably looking at Binance Coin, to be quite honest with you, as the best candidate so far. If it turns around and moves back down towards the bottom, we have support at 150, give or take. And then anything underneath that is the top of that prior foundational building block, closer to 139, 140-ish. And then, you're really fishing for targets underneath. If it starts to go, 1/4 would be the number underneath it. Next up, we have Solana, and zooming out on this one again, just to sort of give you guys that context here. Remember that this one is trading, and it did make a new recent high here, pulling back. Good rebound though. In comparison to everything that we've seen, this one actually made the firmest, as of so far at least, the firmest rebound off of these lows. So to me, that's a huge sign of relative strength. I would say if this prints as a doji, be a little bit skeptical, but if we can get any confirmation, so candle closes up above 220 basically, start to look for the move back into 233, noting that this is your major low, respecting the support trend line and the horizontal area. This would be an aggressive pullback, yes, but look at that, beautiful higher low here from the 4-hour time frame chart. That would be your upside target. From there, you can just walk them up, right? You have 247, then 258. After that, it's blue sky territories. The other thing to point out about this is that this resistance trend line has broken, right? Technically, we're back down underneath it, but you could look at this as a back test. Nothing's really perfect in the crypto world. So as long as we kind of hold up around this area for a higher low, or even if you want to just, dumb it down as simple as possible and hold up above 202, I would say Solana is actually looking fairly good for that move higher, good relative strength. You have the targets mapped out. Now it's all about, can we get some confirmation closes up above this 220 4-hour candle high? Next up, we're going to check in on Litecoin. We know Litecoin is relatively weak, kind of like Cardano, but not quite as weak. Noting, just what's happened here. But back inside of the range, right? If you look at this as kind of that foundational building block, all of this would have been fluff. Your next block really would have been up here. Think about the exact opposite, right? If you use this as block 1, this is now block 2. Block number 3 is forming underneath. So downtrend. I mean, it's quite clear here inside of Litecoin. In terms of levels to watch underneath, we are getting a bit of a hammer candle that's starting to form and very close to printing. We have about 30 minutes left on this 4-hour session. If we can print the hammer here, noting the extended nature of this, maybe we get a little bit of a lift here. But the main thing to remember is, again, relative weakness inside of Litecoin. From here, I would watch to see, do we get a lower high at the resistance trend line? Do we not make it into the horizontal level at 207? or do we break that, right? If we start to break it, then there's potential that this turns into a reversal. But there's a lot of work that has to be done before that is a likely scenario. So in Litecoin, it would probably be something like this. Lower high reattempt here takes you lower into 165. Or the other scenario that's less likely to happen, but you could watch for it, would be here, break higher low, and then a reattempt up and over 207 to get us into the 231 top end of this prior range right here. Again, I do think that that is a less likely scenario, but something to be watching out for, right? Next up, we have Ripple. And checking in on this one, still in a downtrend. This one's been relatively weak for some time, definitely weaker than Bitcoin, basically everything that we've seen so far with the exception of Cardano and Litecoin, but down in the foundational block, right? If we do something like this, you can certainly see that we are getting a hammer candle that's trying to print as a higher low from here, but overall in the midpoint of that foundational block, oops, let's go ahead and put that back, and remembering that the block was, let's zoom out, a little bit of control issues here, but looking at this as the foundational block, maybe actually we're underneath the midpoint here. So in the lower third, I would just say, direction isn't abundantly clear inside of Ripple right now. Sure, the hammer would indicate that buyers are stepping up off of the area of support. That's fine. But in terms of risk reward, right? If you always bring it back to risk reward, where's your reward? Potentially back into this resistance. So let's call it 96 cents. Where's your risk, right? If it turns around, the stop loss would probably go underneath the support here. It just doesn't make sense from a logical perspective at this point in time. I would really need to see some better evidence of a stronger reversal, probably taking out this resistance trend line before I would want to get involved inside of Ripple to the long side. So kind of staying away from this one for now. Next up, we have Polkadot, which we know is kind of that intermediate perfect price point in terms of swing trades, not so much the investment stuff, but you can take a couple coins here for no big deal. If you take a look at this, again, we're at the bottom end of the range. Technically, we have a double bottom. If you did look at it as a double bottom, the neckline would be the break of this. So up and over 38.50, you have a setup on your hands for the double bottom here. It would also coincide with a break of the resistance trend line. So in my estimation, a lot of work to be done, but that's probably the long trade I would wait for. I wouldn't really fish long here looking for that as a target with a stop here. More of about, let's just call it what it is, maybe like a 1.5 to 1 risk reward ratio. Not really seeing it as a decent setup. I mean, obviously if it goes higher, you can increase that, right? So maybe you get your stop to break even as quick as possible and you can go from there. But again, just noting the relative weakness, the overall downtrend of what's going on right here doesn't strike me as the best potential setup for the course of the weekend. I would really wait for that sort of double bottom pattern that we just pointed out from the longer term perspective, neckline, resistance trendline break, all of that good stuff stemming from about 38.50, right? Nice round number, psychological area as well for the target here at 42.50. If it does start moving underneath the double bottom lows, underneath 32.88, look for 30.20, 30 even probably just for round number's sake, and then anything underneath that is the bottom end of the foundational block down here at 26.67. Let's move a little bit quicker through SHIB. The only reason that this is still on the chart and on the watch list, is because we're still above the initial consolidation pattern from in here. If this were to drop down underneath, not interested in SHIB at all. That's kind of the reason Doge worked its way off the list here. A little bit of excitement, a couple, just at the end of last week, give or take, and then it's all been faded back to the downside. So no real setup here. The main level to just watch and continue to watch is 36.37, 36.35. That general area, if we do get down there, I would expect a bit of a bounce, but I'm not sure how long that bounce lasts. Probably only looking for a quick scalp if it gets there. So again, quick trade for something like this. Any reattempts off of a lower high, I would be extremely careful, probably noting that we flush under that 36.35 on a lower high reattempt to get into the breakout point from back here, closer to about 29.25, call it 3,000, right? And of course, there's the 4 zeros in front of that 3,000. So that's SHIB in a nutshell. Again, no reason to spend more time on it than that. In terms of Sandbox, the reason this one is still on the list as well is because this pennant is continuing to play out, right? We were talking about this sort of pattern in the last video, and we're holding up, we're supporting at that 61.8 and also the top end of the prior flag from right in here. So it makes sense to keep it on the watch list. Obviously, we're getting that 4-hour hammer candle, which is forming. If it does result in any sort of bounce, you're looking for a move into the 38.2. We also know it was prior structure. We had resistance and support from in the past. That's about $6.77. From there, that would coincide with the break of the resistance trend line. In my estimation, that's probably the larger move, right? So if you want to be patient on this one, great. I would probably wait for this, wait to see what the reaction is. Do we pull back? Do we form a higher low and reattempt? From there, that's probably the trigger for higher into 780 and then the all-time highs closer to 850. From there, you can walk up into blue sky territories, whole and half dollars, intraday levels that do form. The setup is still respecting this level, and that's a beautiful thing as of right now. Probably being patient and again waiting for the resistance trendline break to get involved. Next up, we have Crypto.com coin, and this one's in a sort of similar situation to what we discussed in SHIB. It would probably come off the list if we break down underneath that major breakout point from in here, but we're testing it, right? And the hammer candle is fairly pronounced. I don't know if pronounced is the right word, but prominent maybe. If you look at the body of the hammer, certainly significant. Lower wick, certainly significant as well. Any recapture of this prior flush point at the 0.6703, we'll call it, look for a move into the resistance trend line, and then again, probably a better breakout up and over that to get us into here, and then here, so 77.90, we'll call it, just for round number's sake. Maybe it's back up towards $1, right? So that's kind of how $1 is unlocked inside of Crypto.com coin. The hype has died down a little bit. I mean, I don't know if you can see it on your screen, but the volume was much greater back in this section of the chart. I would say if there's any sort of news that comes out about the Crypto.com stadium, and again, the Staples Center, that entire thing and that deal sort of gets back out there in the headlines, or maybe there's some new thing going on with Crypto.com coin, that would be the catalyst that, in my estimation, would probably lead to the breakout up and over the resistance trend line, and then maybe that $1 mark. Unless that happens, I would be patient. Again, this is a patience play, just like Sandbox, just like some of those other setups, notably the Polkadot double bottom as well. Again, patience in crypto here. We are kind of in small downtrends, but overall, there's the potential for some of these things to wake up. Let's wrap up the video today with Matic, okay? And this is the hot one on the street, getting a lot of volume. You can see it down here, and a lot of love on social media. This is Matic Network, and if we take a look at the structure, actually, let me leave it zoomed out so you can see prior highs, and you can see that's exactly where we've pulled back into after this uptrend broke it from this section right here. So we have a break retest, and as of right now, we're retesting the highs at around 232. If we can take this out to the upside, look for continuation into blue sky territories. If you miss it, that's fine. Keep this very steep support trend line on your chart and use it as a guide, right? If we pull back into it after setting a new higher high, something like this, then we would have yet again another break retest at the support trend line. It would make sense to do what's working until it literally doesn't. You have tight risk, stop goes under the support trend line, and you retarget the highs, then monitor for continuation. I mean, as of right now, this is picture perfect flagging activity. It's not going to last forever, but it's at least worth monitoring here for into the weekend. So that's Matic in a nutshell. Obviously, if it doesn't break out up and over this, then you obviously need more consolidation. Something like this tightens it up, and then the break may eventually come. If it starts breaking underneath the support trend line, I would probably lose interest, along with probably all of these people who got involved on the way up. They'll probably take profits and bail, and then it will be on to the next hot crypto coin into next week. So that's going to wrap up the video. If you enjoyed it today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget that we will have the weekly watch list coming out on Sunday as regularly scheduled. And with all of that being said, I wish you a green trading week.